listening to Her Profit Era, the podcast for founders who want a business that actually works. A business that's profitable, predictable, and pays them well. I'm Cindy Kumar, a CPA, a fractional CFO from Abbotsford, BC, Canada. I'm the person founders call when they're tired of high revenue months with no money left over. I started this podcast because too many founders were chasing sales while their margins, cash flow, and bank accounts told a completely different story. I believe profit and money in the bank is the standard, not a bonus, and that every founder deserves clarity around their numbers. Each week, you'll get real financial strategy you can actually use and honest conversations with founders and industry experts about what it really takes to build a business that lasts. Today, I'm joined by Terry Sidhu, a real estate and mortgage investment professional with over 30 years of experience in Canadian real estate and private lending. In this episode, we break down what private lending is, how it works in Canada, and why it's becoming an increasingly popular way for investors to earn returns outside of traditional markets. We also talk through how people can participate in private lending, what working with AP Capital would look like, the risk and return profile, and why understanding how deals are structured matters more than chasing yields. So if you've ever wondered how private capital moves or whether this is a good investment strategy that fits into your lifestyle, this conversation will give you more clarity on how it all works. Hi, Terry. Thanks for joining me on Our Profit Era.
Thanks for having me.
I feel like you've been helping so many of my clients. We've had so many conversations about private lending. So I thought it'd be perfect to have you as a guest so we could go deeper and share it with more people.
No, I appreciate it. Love to share more with you, and thanks for supporting us.
Could you share a little bit about yourself and the work AP Capital does?
Yeah, so I've been involved in different facets of real estate for the last 30 years, and AP Capital is a mortgage investment corporation that they call MIC for short, MIC. And what we do is we take investor capital and we lend it out in alternate financing in residential markets across BC, Alberta.
That's amazing. Do you find more people are getting into that versus buying real estate or investing in the stock market?
Yeah, I think one of the main advantages is a lot of the times when you're trying to buy real estate, you have to have a lot of capital up front.
Yeah.
So this is a good avenue for people to kind of invest in real estate indirectly by being part of a lender firm and have it's a good starting point with good cash flow.
What is private lending? I know a lot of people have heard the term, but they don't fully understand what it means.
Yeah, no, for sure. So we all basically we are private lending is, I mean, another word that we use quite a bit in our market is alternate lending, and kind of the same thing. Private lending, anytime the big five banks or the credit unions do mortgages, and for some reason they can't. Like a big proponent of a lot of our borrowers that we lend to are actually self-employed people that actually just need short-term financing, and the big
Right.
banks and the credit unions don't. So alternate lending is just another solution for them short term, so they can still realize their real estate goals without dealing with the big banks.
That totally makes sense. From an investor perspective, what's the minimum amount someone would need to invest with you guys to work with you?
Yeah, it's a great question. MICs generally have to file what's called an OM. It's an offering memorandum, and every MIC is different. But our MIC and that offering memorandum is something that's filed annually with BC Securities Commission. That's to protect the public and make sure you're all in compliance and all that. So our offering memorandum at AB Capital, our minimum investment is $10,000. Yeah, and that comes in several different forms, which I'm sure you and I will cover during this call. So way the investment works is, the good thing about a MIC is you're not investing in one mortgage. So I'll give you an example of AP Capital right now. It's pooled money. So we are plus or minus, kind of goes up and down a little bit, but we're around $300 million in funds in
Oh, wow.
mortgages under management. So if an investor puts in, say, $30,000, that's more than the minimum required, and you're basically buying a pool of that 300 million, so it diversifies across 480 mortgages that we have now.
Oh, wow.
Yeah, so you're basically buying a slither of all those mortgages, and which protects you in diversification. And the way it basically works is, let's say somebody puts in that $30,000. What ends up happening is we have it invested in a bunch of loans out there, alternate mortgages out there, and the yield that you get basically gets spread evenly across everybody across the table. So there's no differentiating as to who put in what. Equality is there. You're part of that mortgage threshold. And I'll add also what might help, because a lot of the clients that you and I have worked on together, there's 3, 4 different ways of putting in the money. One is registered funds, so RSPs, RESPs, pension, tax-free saving is a big one. TFSAs are favorites because a lot of people love investing to TFSA. It's tax-free, and B, the threshold's pretty high if you haven't invested in it yet. So those are called registered funds. We
Yeah.
also have open cash if somebody sells a property or sells some stocks and bonds and they want to invest it somewhere. And then the big one that I've worked with some of your clients on, my favorite, is retained earnings for professionals. Dentists, doctors, lawyers, engineers. They have companies where they have retained earnings, and instead of taking it out where they get taxed personally, they can just
Yeah.
invest it in our fund, and they get the yield paid to them.
Yeah, and another way we were chatting about was that, like, if they have their shareholder loan, they have cash in the corporation with like the passive investment rate being so high, sometimes it makes sense to invest it personally.
Totally. Yeah, that's a good one.
Another question I was just thinking about was that like the risk involved, like let's say someone defaults on like their mortgage payments or something, how does that impact like the
Yeah,
investor?
that's a great question. And even when I'll make investor calls, even to some of our clients that you refer to us, or even generally, one of the things that needs that directly is associated to risk, to give people a bit of a buffer on it, when they're looking at investing in a MIC like ours, AP Capital, or a REIT, or anything like that, one of the things that they need to look at, it's called loan to value. And loan to value is a measure of how risky the fund is. Our loan to value in AP Capital for the 480 mortgages I was talking about, that's roughly about $300 million that's out there right now. Our loan to value of our fund is less than 60%. And what
Oh,
that
wow.
means, I'll just break that down one more, is all of the properties we have, let's say the 480 properties or mortgages we have, if all of them completely collapse, the principal that we have of people that we have invested in those mortgages will not be touched. Like, you will not lose any money, hypothetically, until 40% drop occurs in those properties, which that buffer is huge. There's certain
Yeah.
mix out there that'll go up to 80%, 75% in big markets, and that's their interest rate that they pay out might be higher. But we're and that's how we measure. So there's 3 safety nets. Sorry, one is it's 480 mortgages, not one. So you're not, if one mortgage out of those 480 not goes bad, but gets to that threshold where it starts to get risky, like in a neighborhood or a house, or values drop a little bit, you're still
Yeah.
hedged because we have 479 other mortgages working functionally perfectly fine. So that's the biggest measure that I ask people to read about, is what is the loan to value before you invest in a MIC.
Do you think it's a safer investment than the stock market?
I think it boils down to, like, one of the things I've been saying in the last 30 years I've been in business, different types of businesses and everything else, is like, one of the things that actually helps people invest in a MIC and a REIT is pretty much everybody knows how mortgages work. So you know
Right.
what you're investing in. So if you invest in the S&P 500, or you're putting in stocks and bonds and all that stuff, you may get a similar yield, perhaps even a bigger yield, a larger yield. But in this, it's more, you know exactly what you're putting it in. You know the product. Whereas sometimes you can invest in stocks and bonds and you have no idea what you're putting the money in. And one of the things I always say, like, if you go into bank or credit union, they'll do all these risk assessments on you. How young are you? How, what's your retirement horizon? What's your risk profile? That's one thing that is fine. But when most of the people say put in some money through their bank or credit union into their stock portfolio or something like that, they have no idea where this person's putting their money. Whereas that's one thing, and I always say ease and peace of mind for people is, oh, I know what my mortgage is doing. They're basically taking it, putting it in alternate mortgages in residential real estate, BC and Alberta. And
Right.
whereas in stocks and bonds and all that, so I think S&P 500 stocks, bonds, sometimes you can get a similar yield as AP Capital. Maybe you can even get more. But I think the peace of mind people have putting it in AP Capital is, or a MIC like ours is, everybody knows what a mortgage is, and everybody knows if you invest money, what exactly it's doing. Like we're putting it into these mortgages, and everybody knows how that works. As opposed
So
to,
true.
you go to your bank or credit union, they'll do risk appetites on you. They'll do all these little forms. When are you retiring? What's your goals and all that. But nobody really knows where they're putting it. So you walk away kind of scratching your head saying, what's my money doing? I don't know what stocks or bonds they put it in.
Yeah, and you also don't know like the amount of fees because I know mutual funds are like high in like investment fees, and a lot of people don't even know like how much is going out.
Correct. Yeah. Yeah.
When someone invests in private lending, is their money held for a certain time period, like similar to GICs, or can you withdraw that money at any time?
Yeah, that's a great question. We actually we are pretty liquid. We generally will tell our clients that they can 30 days notice is all they need to get it back. Now, having said that, there is a lot of upfront cost and fees to kind of get the money in, paperwork. So we
Yeah.
don't want to be used necessarily as an ATM machine where people are like, "Oh, I'll give
Right.
it to you for like 2 months, can you give it right back?" And if life circumstances changes or something, we have no problem. But generally, we within 30 to 60 days is ample time for us to return the money.
Oh wow, that's amazing. Because I know a lot of times like money is just stuck there and it becomes harder to withdraw.
Well, even with GICs at banks, sometimes they'll give you like a 2-year rate. People sign off
Yeah.
on that thing, and then let's say you need it back for anything sooner. They say, "Oh yeah, you can take it out," but then you're not going to get any return on it. You're like, "Oh my goodness," right? So,
Yeah.
yeah, we generally, not generally, we good thing about in a pooled investment, pooled MIC like ours, you start get accruing the interest as soon as it comes in, uh, and right till you take it out. So there's no freezing times. There's no, yeah, you earn interest when it leaves the account.
And is that interest earned like once a year or does it get paid out like every single
Yeah,
month?
there's two components to that. So we actually we're regulated by two governing bodies. I see that to everybody on a call, investors and all that stuff. So on the money inside, we're with BC Securities, and on the money out, because our business is basically we get investment money from clients and then we lend it out. So the money in is BC Securities, money out is BC Financial Services Authority, BCFSA for short. And the way that works is under our offering memorandum, which is that document I was talking about earlier that we file annually,
Yeah.
uh, we have to have it audited. So we have auditors that audit our return every year. So it's assessed yearly, the interest that we pay out, but we pay out monthly. So we pay first of every month to all our investors. And there's two components to that. Some investors say, hey, listen, keep my money, but I don't want the monthly payout. So then there's another option we give them, which is called DRIP. DRIP just means that if, let's say you have $100,000 invested with us, and let's say we're
Yeah.
paying 7%, I'm making stuff up, but 7%, that 7% just gets added to your compounded onto your principal every month. Uh, so those are the two that we either pay out first of every month, or you can do a DRIP.
That makes sense. Do you work with clients across Canada or is it just BC only?
That's a great question. We raise capital all throughout Canada except Quebec. So Ontario, all of them. That's where we're registered in most provinces in Canada, all across Canada. But money lending right now, we're doing BC, Alberta. We do just British Columbia and Alberta.
That makes sense. And what is like the process? Like, let's say someone reaches out to you, they're ready to invest, they have the 10,000. What does like the process look like?
Yeah, so we work with investment advisors, and we through friends and family or referral sources like yourself, you've been an amazing referral source for us. We generally will have initial call and talk about high level what we're discussing here on this, and then we will actually get an advisor involved to basically do vetting, further vetting, and make sure that they're licensed and registered with BC Securities to make sure that we comply with all their rules and all that. So the intake process is maybe 1 or 2 calls, and then there's some forms to fill out. So it does often take at least about 10 days to 2 weeks to kind of process the paperwork and get everybody going on it.
Do you guys look at like someone's credit or like tax returns and all of that additional information as well? Or is it more like up their net worth, their assets, liabilities?
Yeah. So the investment advisors that we often refer to, and sometimes often actually people come to us through their own advisor. So a big component is a lot of advisors out there sell our product. So there's often a lot of investors that invest in us that we don't know. We refer to an advisor when it's our friends and family, because but there's a lot of advisors out there that actually raise capital for us. The advisors will basically vet their clients as to, does it meet compliance on FinTrack? Where's the money coming from? All that. So the advisors do all that side of it. We ourselves on our end don't do much other than we just want to make sure you're residents of Canada. We have some non-residents as well, but that's a different channel.
Thanks so much, Terry.
No problem.
What's the best way for our audience to connect with you or even learn more about investing with AP Capital?
Yeah, feel free to reach out. My email is terry@apcapital.ca. We can send you products and information. We can put you on our little mailing list. Even if you don't have any money to invest now, you want to know more about it, we can put you on this monthly newsletter we send out called Fun Facts. And looking forward to answering anybody's questions.
Thank you so much, Terry. I'll share all your details in the show notes.
Thank you.
If you're a founder who wants real strategy, not noise, and you want someone in your corner helping you build a business that feels aligned, is profitable, and actually supports your life, you can apply for CFO on Call. This is my one-on-one financial partnership for established founders, typically making between $500K to $2 million, who want clarity, who want structure and confidence with their numbers. The link is in the show notes, so you can schedule a profit strategy call, or you can DM me CFO on Instagram at @CindyKamar, and I'll send over all the details.